Oracle stock is soaring in 2025 and it's already up over 81% year to date. Of course, I'm happy about that because I've had Oracle stock rated as a buy all year. In fact, most of the year I had Oracle rated as one of the best stocks to buy. So it's one of my better recommendations in 2025, and I'm really happy about its performance. But in this video, I'm going to talk a little more about what's driving that success. Why is Oracle stock soaring? And share with you my discounted cash flow valuation so you can see now that the stock price has increased by 81%. How does it compare with the fair value? Is it now overvalued because it went up so much? I know many of you have that question, so I'll share my model with you so you can see my calculations. I'll do all that in this relatively short video, so let's get right into it after a brief message from my sponsor. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So if I could boil down Oracle's success here in 2025 in one metric, it's remaining performance obligations. Oracle, at the end of its first quarter of fiscal year 2026, reported its remaining performance obligations are now above $455 billion. And this number is up 359% from last year and up over 317 billion, up from 317 billion in the previous quarter. Or in other words, they added roughly $140 billion in remaining performance obligations in one quarter. Now, if you don't already know, remaining performance obligations are where Oracle sends contracts that it signs for long-term deals. Those don't go into revenue, right? So let's say, for instance, Oracle signs a deal with OpenAI for $10 billion for 5 years or $2 billion every year. That doesn't go into revenue right away, right? First, it goes into remaining performance obligations. And then every month or every quarter, as Oracle provides services to OpenAI, that RPO turns into revenue. Okay. And so that's why this RPO number is so significant and signals what Oracle's revenue is going to look like in upcoming quarters and upcoming years. And this number has been soaring almost every single quarter of this year, calendar year. Oracle reported results, and this number keeps rising and soaring. This is the number that I saw accelerating late last year, and why I placed Oracle on my list of top stocks to buy in 2025, because I noticed this figure increasing rapidly late last year, and I highlighted this to my viewers and noted that's why I thought Oracle made a great choice as an investment here in 2025. This is the primary reason why I think Oracle stock is soaring by as much as it is. So overall total revenue growth is not yet significant for Oracle, right? In the most recently completed quarter, total revenues were $14.9 billion, and that was up 11% from last year. So 11% growth wouldn't be the kind of growth that drives a stock 80% higher in 1 year. But it's the remaining performance obligations number that I highlighted earlier, where investors are anticipating Oracle's revenue growth is going to accelerate. Oracle's also been adopting AI internally to run more efficiently, and the management team said that they expect their operating income will grow in the mid-teens this year and higher again in 2027. So Oracle's expecting and forecasting accelerating profit growth and accelerating revenue growth. And those are the kinds of figures that drive stock prices higher. By the way, this document I'm reading from is the company's most recently completed earnings call with Wall Street analyst. I made this highlighted document available for my channel members, and you can join my channel for less than $5 a month. For its last 4 quarters, Oracle's operating cash flow was up by 13% to $21.5 billion, but free cash flow was negative $5.9 billion. And that's because the company spent $27.4 billion on capital expenditures. And the management team is forecasting capital expenditures of around $35 billion next year. The reason they're spending all that money is because they have all those orders and they know they have all that demand. And so they need to build the infrastructure to be able to serve the orders that the customers are placing with Oracle. They're not building this and hoping there is some sales coming down the road. They're building this with orders already locked in, and they need to have this capacity in order to serve the customers that have ordered this technology. All right, so let me share with you my valuation for Oracle. My discounted cash flow valuation has the company's intrinsic value worth $309 per share. The current market price is $302 per share. So even after rising by as much as it has risen, the stock does not look overvalued. In fact, I would say this stock is fairly valued right now at the current market prices. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.